All right, guys, welcome back to the office after a beautiful day out in the sun yesterday. We've got plenty to cover here, looking at the journey through this crypto crash and dying out phase of the market. Some developments happening with the price of Bitcoin. I've got altcoins as well for you. It looks like a reasonable time here, the old last chance. Speaking of crazy headlines, we are doing our best to beat the YouTube algorithm. Thanks to your help, smashing the like button, because I guess you're enjoying just simple titles and no O-faced thumbnails. All right. Maybe it is the people in the background on the beach, but I can't help that. That's essentially the Gold Coast beaches. There are plenty of people to look at on the beaches. Overall, doing fantastically well here. Thank you very much for your support. Smash up the like button and subscribe if you are new. There's plenty of macro coming up, and if you're missing out on the updates, it's going to be hard to follow along as we continue up into the peaks of the real estate cycle, the stock market cycles, the Bitcoin cycles. So let's start it out with the stock markets. Now, the major thing we looked at here for this period of the market is probably a grinding trading range, right? First half 2024 correction or pause. That has now occurred. 1st of April was the peak. The overall look here is that we're probably going to see some sort of rally, which maybe this is all it's been over the last 3 days. But because we've seen those 3 red weeks now, that would suggest that we are in for more downside after a rally. So that could be the rally. Maybe we've got a little bit more, but likely would see further downside. 3 red weeks, rally, downside. 3 red weeks, rally, downside. 3 red weeks, rally, downside. 3 red weeks from the peak, rally, downside. I think you're starting to get the point. I can go back over the charts for years on end, but I think you start to get the idea here. The rally can go slightly higher, but typically you'll see a pullback back into that trading zone. So if you want to take my word for it, great. If you want to do your own research, even better. But essentially, you could look at that rule and see that even if we were to get the rally, the probabilities are in favor of a further move to the downside to at least test those lows, maybe a little further. That's why I'm still of the view that we're probably in a trading range, and this could last for another month or two. So we'll keep following up on the charts. That goes for the NASDAQ as well. The Dow Jones, similar sort of situation, except it didn't have the 3 red weeks, but maybe it's just going to see a rally and it might not crash below the previous low, so it might be slightly stronger there. Nonetheless, when it comes to the S&P and the NASDAQ, looks like we're at least in that trading range for the foreseeable future. Overall, macro bull market still in play. My views haven't changed there. We did not break any sort of 50% levels, significant 50% levels here so far, and we haven't got back to the previous old all-time high. So overall, things are looking all right for the longer term. Shorter term, it seems like we're still in this churny sideways grind. Now, I was going to look at a few stocks. Essentially, the top 7 US stocks here, at least they're all tech. Out of the 7 of them, 6 of them are doing relatively well, even though some of them had some downside, like Nvidia. The worst of the bunch is Tesla. Yes, I'm coming for those Tesla investors. It's a downtrend. Be aware. You'll need to see this thing break above roughly sort of 240, 250 to at least put it back into some sort of signs of strength. Other than that, it's kind of like the XRP mindset. They just keep getting on board a declining train here. These aren't looking too bad, even though they're pulling back. So eventually I can see things going a little higher from here, even if you were to see a recession. I've seen a few bits of data coming up where the market is trying to suggest that the US is going to see a recession in the second half of 2024. UK, take this. The economy met a definition of a technical recession like the US did in 2022, but there was no recession called. Nonetheless, the UK just hit a new all-time high price yesterday. It's in a technical recession, but it's been hitting new all-time prices throughout the month of April. Go figure. Germany did this last year or recently, earlier this year. We covered that as well. This whole recession talk is a waste of time and it's basically misinformation for the masses. You want to be part of that? Go for gold. Otherwise, just keep trading the charts and you will do better than 95% of the people out there. Bitcoin. Let's have a look here. We are on the decline again. This is the macro. Nothing has changed here for the macro view. In terms of the left and right translated cycle, you can see how that narrative has started to die off a little here because things got so hot so quickly in that 6-month move to the upside. If you want to look at the monthly chart here, there were 6 months within the swing and 7 green months. Many were thinking that this was the end because we hit a new fresh all-time high price. But the same sort of thing happened back in 2019. We ran up really quick. We didn't go to a new all-time high, but it ran up very, very quick. 6 months in the swing. And people were looking at it being a left translated cycle, which is why I've got under here wrong. The market sentiment was very, very wrong. We didn't get the left. We had a long pullback, and then we got into a right translated cycle. All that means is that you would see less downside or a shorter bear market than the bull market. So you had roughly 3 years up from the low to the high and then 12 months down. So similar sort of thing here. I don't think we are getting ready for some sort of left translated top. Again, there's still about 6-7 months to go until we got to that midway point of the 4-year cycle. Not this halving cycle, forget that thing. The 4 years of the low to the low, that's how you measure these cycles. And if we were to pass October of this year and put in a new fresh high, that would technically put us at a right translated cycle, which could still mean we would see 18 to 24 months of a downside if that was the peak. But we might also see it go up for a few more months from there. So I'm looking towards Q4 2024 and Q1 of 2025 to see where the market is at. Could it be the final peak? Maybe we go higher later into 2025. We need to wait and see from this particular point. So with this pullback at the moment, this is doing well to set us up for that next move, providing we can hold out here, or at least Bitcoin price can hold out in this grinding trading range for the next couple of months. Now, what is this grinding trading range? So far, it's sitting between 59 and 74. Overnight, for the short term, we did get a rejection at 67 again. Remember, we looked at 67 as being that key level on the 13th of April, so nearly 2 weeks ago now, and it got swiftly rejected at 67, came back down. Now, we've just seen that in the last 2 days. There was 67 inside day, and then the rejection in the last 24 hours. So it's really trying to hold up here at 63. What does all this mean? If Bitcoin breaks down from 63, probably going to see further downside. Probably going to see 61 down to 59 tested, because that 50% level is key right now. Look at all the closes that have happened at that price. You can go back to the previous lows here. You can see the rejection as it climbed up in February and March. So around that sort of 63, 64 level has been pretty important through this trading range. And I think if we do get that breakdown again, this level is going to be in trouble, 59, 61. And of course, if that starts to break down, well, then I'm looking towards the 50% level at 56K, and then back to that range, roughly around $50,000 to $53,000. We're not there yet. The $63,000 level will probably show if there are any cracks in the market coming up. Now, speaking of cracks in the market, we've got the average true range here. So the range of the bars, or candles in that case, extends in these huge moves to the upside, looking at the average, of course. And then as it starts to come down to go into a grinding trading range, you'll see the range of the bars decrease. Now, that doesn't mean that the market is over, that the whole bull market is over. It means it's just going back into a holding period, potentially a consolidation before we see another move to the upside. So you can see it happen throughout 2023. We have March through to October. So roughly 7 months there where the ranges of the bars squeezed, they got smaller. And that is just a sign of the market quietening down, the interest goes, and then some consolidation can happen before you see the breakout. So from these points, this is where the masses leave. So if you were one that left in 2023, don't make that mistake again. Don't leave the market if it gets boring. That was 2 months down, about a month up, another 2 months down, and then it took a couple of weeks to get going. So it can take some time. I'm not expecting this time to take 7 months. We have also looked at this in past videos where we have, well, the Bitcoin has shown plenty of turns around March, April, and June. So far, we've got the peak in March. We ran up again to the 1st of April. And after those periods, you can see that it consolidates for about 3, 4, 5 months. So it's not uncommon for Bitcoin to do these sorts of moves. If we've just had this big run up now, we have a pullback into the 50s, maybe the high 50s, and then consolidate through here for the next 1, 2, 3, 4 months, it's doing exactly what it has done in the past. And this is typically where the interest dies off, and you can see it from the true range of the bar, the average true range, and you can see it from the exchange volumes as well. People are basically leaving, no one's talking about it anymore, they miss out, and they only come back into the market when it breaks into new fresh highs. So everything is still going along as we've expected with the macro cycle here. The quarterlies are working, the monthlies are working, the swings are working, the turns through March, April are still working. So there's no reason to think that this cycle is over, but it seems like we have got into that period where the masses lose interest and we might just grind out. Maybe there'll be a few crashes along the way to take out some of these significant lows, but then you start to feel that dying out. Now, that dying out feel can happen here. Maybe we get it here at 63, we break above and get it again at 67. It can happen at any point, which is precisely why I say don't leave the market, just in case this is invalidated at these levels and we break a little higher to 67 to then consolidate at those levels. With that in mind, cryptos have also been dying out. The feeling, the movement of the market. ETH hit its 50%, just this little short-term 50% here at 3,300 US. Had a nice pullback there. At the moment, it looks like it's trying to at least hold up to then push again. So if we get down to a shorter term time frame just for this swing, you can see it pulled back right to the 50% level at 3,080 bucks. So when cryptos get into this grind of hitting a low, then getting rejected at a 50% level, then coming back to a shorter term 50% level, you can see how that squeeze in the range of the bar occurs, which then causes many people to leave because there's nothing exciting to do in the market. And so they're just waiting for something exciting to happen. This is the exciting time when no one else is here. It's different to how life works. You want everyone at the party. You want to enjoy yourself. You want to, be chatting with friends and having a good time. You don't want that in the markets. You don't want to do that because that's usually when those peaks happen. These are the times where you're basically in the library by yourself, studying the charts and understanding that no one else is here at the moment, or far less people are here at the party, and that's the time that you want to be looking at getting those sweet altcoin deals. Similar sort of patterns happening for Solana. It had its crash, it bounced back to 50%, so that's this one right here. All right, that's 50% there, 162. It's been rejected from there, and it's back at that 50%. So we're starting to get this contraction of ranges, which again just goes back to the old dying out feeling that happens in the market. So that's what it looks like on the chart. Important points to note would be the significant lows that have started to form. If Solana was to break down from 120, be cautious that it doesn't go too much further than roughly 108 to 80 bucks. I'm not saying it gets there, but just be cautious about those levels because that would be a sign that maybe Solana is not going to do as well in this next stage, only because it would break down from those levels, right? They're significant support levels. That's all there is to it. But if it fades out here, holds at these levels, maybe it does a flash crash to those lows, takes out some more stops, and then holds above roughly 120 to 140, no big deal, nothing lost at that point. Pendle also looking relatively strong. It could come back a little further. It's done some pretty significant moves to the downside already, 35%. As we've covered with altcoins, they can go sort of 50, 60, up to 80% from their peaks. Just look at where that lines up with their previous zone of consolidation. The 50% levels at about 50% away from the top, and to those previous tops of Pendles at roughly $3.20, it takes you down to about 57%. So you could still see this movement from 40 to 60% from the tops, and it would still be relatively strong for that altcoin. So I'm just looking at the alts against their USD prices today. Fetch in the AI space, again, same sort of thing. It's pulled back 54% from the top. It bounced, hit 50%. It got rejected once, twice, 3 times and it's pulled back again. And if I'm to pull up a 50% for this level, I dare say that's going to be right through the middle. Check this out. All right. You can start to see it with your eyes. Top to the swing bottom, it hit dead on 50%, closed just above it. So if this starts to break down under that level, probably going to come back and test these lows again and test somewhere around that sort of 170 to 190 on the price chart here. So keep those in mind for your altcoins. The same rules apply. Watch the significant lows that were formed roughly around the 13th of April and the previous lows on the way up. You don't want to see them go back into the previous consolidation zones. That would be a huge red flag for that altcoin. Just so you can see what a red flag looks like, I've got to pick on ADA here. It's dropped back into the consolidation zone, but you can see it bounced away. However, it is now reversing. So if ADA is to drop back underneath sort of 40 to 45 cents, it can still go up in the next stages, but it's probably going to be a lot weaker than altcoins that have managed to remain above the consolidation zone and above support levels. Even if those are at higher prices and this is a long way from the top, it doesn't matter. The idiots, and I say idiots in the most harsh way possible so that we can get it through our heads, idiots, or it's for the analysts on X and YouTube so people don't get sucked into it. They look at the top, oh, this altcoin's down 80% from the highs. What if it just got back to that old all-time high? Dickhead, it's down for a reason and it's much lower than other altcoins for a reason because no one is looking at buying this thing. There's nothing underlying, there's no underlying strength about this coin. That's why it's down 80 to 90% from the highs at this stage when other altcoins have gone up already. They've broken past significant accumulation zones. They've broken past key resistance levels and they're potentially holding above a key 50% level of the entire bear market. There is strength behind those altcoins that have done that. So again, I say it extremely harshly to those guys so that other people don't fall for it. Those idiots that are saying this, that whatever altcoin is down by 80, 90% still at this stage after we've already seen a pretty strong move for the majority of altcoins, are really setting up any of their followers or members or anything like that in their Telegram groups for huge failure. And I see that often with, I had to do it, with the XRP community. This hunk of junk is still at low levels. So with all of the strength that is outlying there in the market, was not able to get back above any sort of resistance levels, well, it's just showing you that it's a piece of shit. And you might in fact have even better altcoins than this. So I hope you do. If you want to share them, put them in the comment section. That's Bitcoin, that's cryptos. I'll go through the USDT chart with you and the total altcoin market cap in another video. Like and subscribe. That's the update for today. I hope you're having a fantastic day. Enjoy your summers, and I'll see you guys real soon. Take care and peace out.